Did you know that Australia is now one of the most heavily indebted countries in the world? For every dollar Australians earn, they owe nearly $2 in debt. At the same time, the cost of living is skyrocketing, and millions of families are struggling just to keep up with everyday expenses. But what's even more alarming, experts are warning that these aren't just short-term problems. They might be the early signs of something much bigger. Could Australia's economy be heading for a crash? Is it possible that the danger is already here, quietly building beneath the surface, while most people continue on unaware? In this video, we'll uncover 10 powerful reasons why Australia's economy might be on the edge of a serious collapse. Stay with me until the end, because reason number 1 might just be the biggest threat no one's talking about, and it could impact your life sooner than you think. Number 10, rising cost of living. One of the most immediate and painful signs that Australia's economy is under pressure is the soaring cost of living. If you've been to the supermarket lately, you've probably noticed something shocking. The price of everyday essentials like bread, milk, and fresh vegetables has gone through the roof. In fact, some grocery prices have doubled in just a few short years. And it's not just food. Housing, fuel, energy bills, they've all climbed at a pace that many Australians simply can't keep up with. What's driving this? A mix of global supply chain issues, local shortages, and persistent inflation. According to the Australian Bureau of Statistics, inflation is still well above target levels, eating away at the buying power of everyday people. Even though wages have barely moved, everything else is getting more expensive, squeezing families from all sides. It's like trying to fill a leaking bucket. No matter how hard you work, your money just doesn't go as far as it used to. Why is this dangerous for the economy? When people spend more on basic survival, food, rent, and utilities, they cut back on everything else. That means less spending in shops, less dining out, fewer holidays, and stalled investments. It slows down the whole economy. And here's the worrying part. When consumer spending drops, businesses start to feel the heat, which can lead to job cuts and even more financial pressure. Have you felt this squeeze in your own life? If so, you're already living through the start of what could be a much larger economic storm. Number 9, wage stagnation. While the cost of living keeps climbing, there's another silent threat hurting Australian households: wage stagnation. For years, wages in Australia have been crawling at a snail's pace, barely keeping up with inflation. According to recent government reports, real wage growth has flatlined for much of the past decade. This means that even though prices are rising rapidly, most people's pay packets have stayed almost the same. Think about it. Have you ever felt like you're working harder than ever, but still struggling to make ends meet? That's not just your imagination. It's the reality for millions of Australians. Workers aren't being paid enough to match the soaring costs around them. As a result, people are cutting back, fewer nights out, delaying big purchases, and skipping holidays, simply because their income can't stretch far enough anymore. Why is this a big deal for the whole economy? When wages stay low, people stop spending on non-essential goods and services. This slows business growth, reduces job opportunities, and can trigger a dangerous downward spiral. Companies make less money, so they can't afford to raise wages, which then keeps people's spending low. It's a vicious cycle that's hard to break. Economists warn that if this wage stagnation continues, it could seriously weaken Australia's long-term economic health. Low wages can crush consumer confidence, delay financial goals, and even trap people in debt. If you're feeling stuck in this situation, you're not alone. It's a nationwide issue that could soon snowball into something much bigger. Number 8, housing market volatility. For years, Australians have been told that property always goes up. But what if that belief is starting to crack? Right now, the Australian housing market is showing signs of serious volatility. After a period of record-breaking price surges, we're now seeing cooling markets in major cities like Sydney and Melbourne. Some suburbs are already reporting falling house prices. and that's making both homeowners and investors extremely nervous. Why is this dangerous? For many Australians, their home is their biggest financial asset. When house prices fall, people feel less wealthy and cut back on spending, even if they're not planning to sell. It's called the wealth effect, and it has a powerful impact on consumer behavior. If enough people start pulling back, businesses will suffer, leading to job losses and lower economic growth. And there's another major risk. What happens to those who bought at the peak? Imagine taking out a huge loan to buy a house, only to watch its value drop by tens or even hundreds of thousands of dollars. These homeowners could soon find themselves in negative equity, meaning they owe more than their property is worth. That's not just a personal crisis, it's a financial bomb waiting to explode across the economy. Experts warn that the Australian property market has become heavily inflated, and rising interest rates are now applying intense pressure. Could a sharp downturn trigger a wave of mortgage defaults? Some analysts believe it's possible, and if that happens, it won't just be the housing sector that suffers. Number 7. Household debt levels. Here's something that should seriously worry us all. Australians are now carrying one of the highest household debt loads in the world. In fact, the average household owes nearly twice their annual income in debt. That's not just mortgages, it's also credit cards, personal loans, and car repayments piling up like a mountain. Why does this matter? High household debt makes the entire economy incredibly fragile. When interest rates rise, as they have recently, repayments go up. And when more of your income is spent on just servicing debt, you have less money left for shopping, holidays, or even saving. When this happens across millions of homes, it chokes the economy's breathing room. Let's bring this closer to home. Have you noticed your loan repayments creeping up? Or perhaps you're feeling squeezed between paying your mortgage and covering your daily expenses. You're not alone. Many Australians are now spending a huge chunk of their income just to stay afloat, and for some, it's pushing them dangerously close to financial collapse. The real danger? When people can't keep up, they start to default on their loans. If enough households begin missing repayments, this could trigger a banking crisis, a drop in consumer confidence, and a rapid slowdown in economic growth. It's a domino effect that can happen faster than most people expect. Experts say Australia's debt addiction is like a ticking time bomb. The question is, how long can we keep this going before it all comes crashing down? Number 6. Interest rate pressures. If there's one thing that's hitting Australians hard right now, it's rising interest rates. After years of record low borrowing costs, the Reserve Bank of Australia, RBA, has been rapidly increasing rates to try to control inflation. And for many families, this has created a sudden financial shock. Monthly mortgage repayments have jumped by hundreds, even thousands of dollars, almost overnight. Why is this such a big deal? Australia's economy is heavily dependent on consumer spending, but when interest rates rise, people have less disposable income. More money is now going straight to the banks to cover higher loan repayments, leaving less for shopping, travel, dining out, or investing. This squeeze on everyday budgets is slowing the economy from the ground up. Many homeowners are now trapped in what experts call mortgage stress, where a large portion of their income is swallowed by repayments. This not only hurts individual households, it also creates widespread financial anxiety that can ripple across the whole country. The property market, retail sector, and small businesses all feel the pressure when people tighten their wallets. And it's not just mortgages. Credit cards, car loans, and business loans have all become more expensive. For some, rising interest rates are simply unsustainable. Could we be heading toward a wave of defaults and bankruptcies? Some economists think it's possible if rates continue to climb. So the big question is, how much more financial pressure can Aussie families really take before something breaks? This is a sign that the cracks in the system are already starting to show. Number 5. China's economic slowdown. One of the biggest hidden dangers to Australia's economy is something happening outside our borders: China's economic slowdown. For years, Australia has been heavily dependent on China, especially for exports like iron ore, coal, and natural gas. When China was booming, Australia thrived. But now, China's growth is losing steam. Why is this a problem? China is Australia's largest trading partner. If China's economy slows down, its demand for Australian resources shrinks. Less demand means falling export prices and fewer profits for some of Australia's biggest industries, including mining and agriculture. This isn't just bad news for big companies. It affects jobs, investment, and government tax revenue. And it doesn't stop there. As China faces its own housing crisis, rising debt, and slower consumer spending, the ripple effects could hit Australia hard. We've put too many of our economic eggs in one basket. If China pulls back on imports, or if trade tensions flare up again, Australia's economy could be in serious trouble. You might not feel this right now at the local supermarket, but experts warn that Australia's deep reliance on China makes it dangerously exposed to global shocks. The slowdown could quietly drag down growth here at home, with consequences that might take years to fully unfold. Could Australia survive if China stops buying? That's the question economists are now asking, and it's a question every Australian should start thinking about. If you found value in this video, we'd love to hear your thoughts. What worries you most about Australia's future? We put a huge amount of effort into making these videos, so if you could support us with just one click, please subscribe. It really keeps us going. Number 4. Global economic uncertainty. While Australia faces its own internal challenges, we can't forget that the world is going through a period of serious economic uncertainty. The global economy is like a tightly connected web. When one part shakes, the whole system feels it. Right now, that web is under pressure from geopolitical tensions, energy crises, trade wars, and ongoing supply chain disruptions. What does this mean for Australia? As a trading nation, Australia is deeply exposed to international risks. If major economies like the US, China, or the Eurozone slow down or fall into recession, Australian exports, tourism, and investment can quickly take a hit. We've already seen how fast global events, like the COVID-19 pandemic or the Russia-Ukraine war, can ripple through supply chains and push prices higher at home. Remember the empty shelves during the pandemic? Or the sudden spike in petrol prices? These shocks didn't start in Australia, but we still felt them immediately. That's the danger of being part of a connected global system. We don't always control what happens, but we almost always pay the price. Experts warn that Australia's economic future could be heavily shaped by factors far beyond its borders. Rising oil prices, fragile international relations, and climate-related disasters are just a few of the risks that could suddenly tip the balance. So here's the big question: how prepared are we for the next global shock? Because history shows that when the world catches a cold, Australia doesn't walk away untouched. We usually feel the fever soon after. Number 3. Declining productivity growth. There's another major warning sign that often flies under the radar: Australia's declining productivity growth. Productivity is a key driver of long-term economic health. It basically measures how efficiently we produce goods and services. When productivity grows, businesses can afford to pay higher wages, the economy expands, and living standards improve. But when it stalls, the whole system slows down. Unfortunately, that's exactly what's been happening in Australia. According to recent reports, productivity growth has been weak for years, and in some sectors, it's even gone backwards. This is a serious red flag. Without strong productivity, we can't grow our economy fast enough to keep up with rising costs, population growth, or future challenges. So why is productivity falling? Experts point to a mix of outdated infrastructure, underinvestment in innovation, skill shortages, and too many businesses stuck in low-growth, low-tech industries. Instead of leading in cutting-edge fields, much of Australia's workforce is still tied to traditional sectors that aren't evolving quickly enough. Why does this matter? Low productivity growth limits wage increases, slows national income growth, and makes it harder for businesses to compete on the world stage. It also means the government collects less tax revenue, which could eventually lead to cuts in public services or higher taxes elsewhere. If Australia doesn't turn this around, we risk slipping into a cycle of sluggish growth, rising debt, and falling living standards. The solution: Australia needs to invest more in technology, education, innovation, and modern infrastructure to drive future productivity gains. Without this, we're essentially walking into the future with our shoelaces tied together. Could this be one of the quietest but most dangerous threats to Australia's economy? Many economists think so, and it's a conversation we need to start having now. Number 2, over-reliance on resource exports. One of the biggest weaknesses in Australia's economy is something we don't talk about enough. We've put too many of our chips on one bet. Resource exports. Australia's economy is heavily dependent on selling raw materials like iron ore, coal, and natural gas to the rest of the world. And while this has made us billions in the past, it's now becoming a serious long-term risk. Here's why. The world is changing fast. Global demand is shifting towards clean energy, renewables, and sustainable technologies. As countries push harder for net zero emissions, Australia's key exports, particularly coal and gas, may soon see falling demand. And when demand drops, prices follow. That could strip billions from the Australian economy in the years ahead. Think about it. What happens if the countries we rely on most suddenly stop buying? What happens if the world moves away from fossil fuels faster than we're prepared for? Without strong, diversified industries to fall back on, Australia could find itself scrambling to catch up. This over-reliance doesn't just make us vulnerable to market shifts. It also limits job creation in other innovative sectors like technology, green energy, and advanced manufacturing. We've essentially tied our future to yesterday's industries. The scary part? If global prices collapse or international policies cut off demand, Australia could face a sharp economic downturn. To survive, we need to start building a more balanced economy. And we need to start now. Because the truth is, when you depend too heavily on one thing, all it takes is one fall to bring the whole system crashing down. Number 1, lack of economic diversification. At the heart of Australia's economic challenges lies a deeper, more dangerous problem. Our economy isn't diversified enough. For decades, Australia has relied on just a few key sectors to drive growth: mining, property, education, and tourism. These industries have served us well, but what happens when they stumble? Without a broad, flexible economy, we don't have enough strong pillars to keep us standing. Let's break it down. When China's demand for our iron ore slows, when property prices fall, when international students can't travel, or when tourism takes a hit, the entire system wobbles. That's exactly what happened during COVID-19, and it exposed just how vulnerable we really are. Experts have been warning about this for years. Putting too much weight on a few industries makes us a soft target for global shocks. Australia has been slow to build serious strength in other areas like technology, renewable energy, manufacturing, and advanced health sectors. This lack of diversity limits our ability to adapt quickly when things go wrong. It's like trying to sail a boat with only one sail. When the wind changes, you're stuck. The risk? If one of our major industries collapses, it could trigger a domino effect, shrinking jobs, cutting government revenue, and shaking consumer confidence all at once. An economy that isn't flexible is an economy that can fall hard. So here's the big question. Are we prepared to future-proof Australia? Because right now, we're betting everything on just a handful of cards. And it only takes one bad hand to lose it all. So, is Australia's economy really about to crash? While no one can predict the exact future, the warning signs are flashing all around us. From the soaring cost of living and stagnant wages to household debt, global risks, and our over-reliance on a few industries, the cracks in the system are hard to ignore. These aren't isolated problems. They're interconnected threats that together could seriously shake Australia's financial stability. But here's the thing. This isn't just a story about numbers. It's about real people. It's about families struggling to keep up, homeowners worried about their repayments, and young Australians wondering if they'll ever get ahead. The decisions we make today, as individuals, as businesses, and as a nation, will shape whether we fall into crisis or find a way to rebuild smarter, stronger, and more diverse. So, what do you think? Are we heading towards a crash, or can Australia turn this around in time? We'd love to hear your thoughts in the comments below. Your voice matters in this conversation. And if you found this video valuable, please consider supporting our work with just one click. Subscribe to our channel. It really helps us keep bringing you videos like this.